they're trying to cause pain and hurt. Like that's the only way to slow down the economy.
Dude, now finance. Let's move to finance news. You notice, right? Bitcoin, 38K, baby.
38. Pump it up. Pump it up.
Pump it up. Yes, and I think that we still are kind of holding or waiting on the ETF, right? That's what is sparking these rumors and this price action. So, I mean, double. It's already more than a little bit of the double of for this year, right?
Yeah, I think like this time last year it was at 15K, and that it kind of held that price range going into the beginning of this year. So if you bought Bitcoin at the beginning of this year, even towards the end of last year, from 15 to 38, that's a big swing. So it's more than doubled there. So it's looking pretty good there. But again, BlackRock is driving a lot of this. So I think the latest that we're hearing is BlackRock feels pretty confident that by January, they're going to have their ETF that's been approved. And not just theirs, it's going to be more than likely across the board. But some of this price action is also because some people were saying, hey, by Thanksgiving, we might have these ETFs approved. So we're starting to hear some things, and it's just getting closer and closer. But by the way, BlackRock also this week announced, hey, we're buying Ethereum. It caused it to double also. So Ethereum was hovering around, I don't know, maybe $1,000 or so dollars or something like that. And now it's over $2,000 right now. So Ethereum made a huge jump with that, which in a way I'm not too happy about, because I had a bunch of Ethereum on Celsius and they went bankrupt, right? Because they got caught doing fraud, just like this other FTX fool. This is Mashinsky over here though. Their bankruptcy proceedings just ended this week also. So we're looking to get a payback. The thing is, the payout that I expected to get, if Ethereum said I would get more Ethereum, but now that the price is going up, they're going to end up getting less Ethereum because they're doing it by the dollar amount, not by the Ethereum amount, right? So I'll get less Ethereum out of there. But that's the way it is. You take risks, and I lost a little bit on this one, but overall, I'm way up.
Once again, if you have your coins in some of these companies, they're not highly regulated, right? That's kind of the issue. I was in the beginning in the camp of not being like kind of very independent and all of that, but that's the reason why we have the SEC, right? Protecting consumers and all of that. So I think that it's important to get regulated, and as more banks older institutions are joining, I think that it will help to regulate. I see it more now as a healthy competition. Like the technology can move faster the money, right? So in that way, hey, banks, if you guys are not faster in order to process it and remove your bureaucracy and paperwork, then it's good competition. So we'll keep watching the price. It's a good hike. No complaints there. So what's the next news?
Well, so just back a little bit on this BlackRock. So again, the halving is happening in April, it seems. So we're thinking pre-halving this BlackRock news could really send Bitcoin back up to its previous all-time high at 69,000. So people are calling for 100K, and this could all be even before the halving, which typically following the halving, you also see a big rise in price. So really good information there. But so we're hearing all this good news on crypto, but at the same time, we're hearing kind of these bad news about kind of U.S. economy. So did you hear about the Moody credit rating? They put the U.S. as in negative territory. Like
explain
not a good
explain
thing.
What is that? What is the Moody credit?
Well, so right now, what's going on is because we have such a large amount of deficit, right? The government, we're like in the trillions of deficit. All our actual loan payments that the United States has to make, it's totaling over $1 trillion every year. So when you look at the U.S. budget, we're paying $1 trillion every year just on interest. And so this is showing up by Moody. The Moody credit rating, they actually assign a credit rating to a lot of different organizations, and they're saying, hey, the US is not really in a good shape right now because their interest payments are too high. It's $1 trillion. And when you look at how much we're bringing in terms of tax revenue, it's going to be really tough to pay off our debts, our US's debt. So they're saying, hey, it's been going down a little bit over a while. Before it was at the highest level, then it kind of came down a little bit, and now they're saying, it's negative. So this is not a good thing. I think there's a lot of policy that's going to be affected with this, maybe with regards to like the interest rates, the Fed rates, things like that. I don't know how it's going to impact, but it's not looking good.
I mean, it's always tough. Sometimes we give hard time to the government, but so far they have been handling well the kind of the recession, right? It always could be worse, right? So I think that it is complex. This type of movements, printing money, raising the interest, you have to do them, but it's only a few variables, right? And you don't know how it's going to react across the whole ecosystem. And as well, all of this was a recoil from COVID, right? So in some point, COVID, it was very weird because people was not going out. So their savings accounts were like very high. But unfortunately, after these next years, then people spend it all. So again, it's very, very hard to predict the models of what is going on. But yeah, let's keep watching that to see how it affect. Have your, for you, the audience, make sure that you are having some of your savings, right, for a rainy day. And because you never know when it could happen.
Right. On top of that, we've heard the Fed saying the way to fix inflation, the thing that's going on right now with interest rates being above 8% and things like that, like for mortgages and stuff, they're trying to cause pain and hurt. Like that's the only way to slow down the economy. So that's why they keep raising the rates. And the way to do that typically is they try to cause job losses, right? That's going to be one of their main indicators. The thing is, right now, the jobs reports have seen pretty good strength. Like people aren't losing their jobs yet. So even though the Fed did pause on raising rates, they did leave it open to like, hey, if we still don't see this inflation stuff kind of getting under control, they kind of reserve the right to keep going up. And so that causes just a little bit of uncertainty with the banks and things like that. So they're being a little tentative with the rates. And so we're going to see these 8% rates for a little bit, I think, until things do start either slowing down or at least we see inflation really slowing. So that's, we'll see how that goes. But this negative outlook that the Moody folks are saying right now, it's not a good sign, but maybe it's what the Fed is looking for. They're looking for things to slow down a little bit in terms of the economy and things like that. So we'll see how it all plays out, but it's kind of this weird web of things, and it's hard to, that's what people do, right? They try to guess how it's going to affect things, and they make bets with their stocks or their portfolios and things like that. Of course, Bitcoin and crypto, things like that are kind of, it's a way to opt out of that system. And so I think that's why we're also seeing a little bit of price going up.
To help you to hedge, right? So regarding that, but yeah, let's keep watching that.